Hello everyone, my name is Jordan and I'm the creator of the FX Delta software. As you know, every week we're going over the trades taken during the previous week so we can better understand the kind of setups that we're looking for and overall what are the best scenarios to use the software and how to filter trades. So let's jump to the charts and see what we had last week. Now, first of all, this is the website fxdelta.net. Under performance, you will find this table. It is currently filtered for the previous week here. As you can see the dates, and clearly we have two trades only. Now, previous week, both these trades were losers, so we end up in negative, and you will notice that they're both Kiwi related pairs, which means we have correlation here. And it's not, of course, necessary, but it might be a good idea to go ahead and change the risk slightly when you're trading correlated pairs. I don't do it all the time, I don't do it always, but if I see a setup which has some question marks in it and it's not the optimal perfect setup, and I have a correlation on top of that, I'm simply going to use less risk for one or the other. In that case, less risk applied to the Euro Kiwi trade. And that being said, let's see what and how. So Euro Kiwi, the first one, we were looking for sales and we did get the sales. This is where the divergence and the breakout happened. The higher time frame range is fine, which means we're attacking immediately with the breakout here. The higher time frame direction is bearish, meaning that if we're on the 1 hour chart, that means the daily chart is showing us bearish delta pattern, and this is where the actual attack was triggered and the entry. Unfortunately, immediately after that we got the spike up, the range, and then the move happened. But this first one was kicked out, and here is the 4 hour chart, not the 4 hour chart, the 1 hour chart. So that's where the trigger happened. This is the stop loss, and as we said, this is where we got the continuation lower after that, only on the second attempt. Daily chart, which is the more important in my opinion, what can we see here is that we got the bearish delta pattern right here, hidden divergences from that high or from the swing high. Doesn't really matter, it still gives us hidden divergence, which means bearish pressure. So in our case, regardless of the fact that we might be getting leg A here, something like that, right, or leg 1, pullbacks and then another leg and then continuation also, when all that combined together, we can see the price pushing to the downside. So the idea is, even if you're 50% correct and the market is not yet ready to give us the new lows or double bottom, to enjoy from that pullback or continuation here. So that was basically the idea. Good delta pattern, obviously, and clearly we have the momentum, we have the trending structure, we have the divergence confirmation. So once we got the trigger on H1, we're ready to attack. By the way, when we're dealing with daily charts, the daily delta pattern, we're using two time frames, the 4 hour chart and the 1 hour chart. So overall, you will know that, you should know actually, the 4 hour chart would be slightly more conservative, but it's not always going to deliver the setup. On the other hand, 1 hour chart is more likely to catch a trade setup. I'm talking about the breakout and divergence and all that. But in many cases, since this is H1 and it's kind of far away from daily, we might end up in situations like that, where we we could be kicked out right before the actual move is happening. So that's about Euro Kiwi. Next one was Kiwi dollar. Okay, again we got here the buy. Not again, it's the first time. We got the buy here, this time the 4-hour chart. Divergence, breakout, and the expectation is to see the continuation for one last final leg to the upside before we get major pullbacks, reversals, corrections, whatever it is, right? We just care about the move up. Here the move didn't start exactly like boom, crash down like we saw in the previous one, but slowly managed to get to the stop loss line. Now what I missed to say here is that the higher time frame range in that case was wide, and this is what the software told us. So once we got the breakout, it was a good idea. Of course this is not mandatory, but that's why we have this filter, right, to tell you that this range here is too big based on the algorithm, which means it's a good practice to go ahead and use the pending orders. That's why we have them in the trade management, and by default the idea is to go ahead and look for the 50% retrace, which is, by the way, the default line, where the line will be placed in the 50% of that zone, and for the entry to be triggered right there. Usually when that happens, we can then push the take profit towards the top, the breakout zone, and this way, even if we get stuck in a range, and of course we don't get kicked out right there, we will be able to cash out at least the first target and then let it develop. In that case, of course, you can see that the stop loss was hit on the move down. So that's it for this week. If you have any questions about these two trades, please leave your comments below, and I'm wishing you a fantastic week ahead. Thank you.